welcome to lesson 5 of the 1% playbook. Today we're going to be diving into our full top-down analysis. We are going to be analyzing the market from our higher time frames all the way down to our lower time frames. So while you're doing your top-down analysis, you want to be looking at the big picture, which is your weekly, your daily, and your 4-hour time frames. They are your big picture. And then you want to zoom in to your entry time frames, your 1 hour, your 2 hour, your 30-minute. Okay? So in the top-down analysis, we want to start with the big picture and zoom in for entries. Big picture are our weekly, daily, 4-hour. And zoom in for entries on our 30-minute, 1 hour, 2 hour time frames. So why does this matter? This matters because it, for one, prevents trading against the trend, improves accuracy, and helps you find better entries. So today we're going to be starting in our weekly time frame. We went over this a little bit in our previous lesson, but I want to go more in depth today and give you my points of view of our weekly, daily, 4-hour and how I analyze the market. So I've chosen to do a full top-down analysis on Euro CHF. I love this pair. I especially love it for this week. I love how we're very bearish. This is one of the pairs that I'm interested in trading this week, but I want to do our full top-down analysis on Euro CHF. So we're going to go and start on our weekly time frame. So let's make our little lower high and lower low lines just so that we can identify our lower lows and our lower highs. Our highs and lower lows. And you might be thinking, what would I count this? I would not count this as the next lower low, not in the weekly, because this is not necessarily an elbow. This is 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 an elbow. I would count this as the lower high and this as the lower low. So, as you can see, let me get rid of these right here. The weekly time frame is bearish. Okay? So let's go down to the daily. So zooming in here in our daily time frame, I can tell immediately that we are also bearish, like our weekly time frame. So we've got the weekly bearish and now the daily bearish. As you can see, we broke the low here, retested, and gave us a new lower high, new lower low. So we would put our daily our little daily marks here. Let's clone that. And here is our lower low. And here is our lower high. Okay, so since we have not shifted below this lower low or above this lower high, then making the market bearish, or then creating new lower highs and new lower lows, we are simply in the middle of this lower high and this lower low. Okay, so let's go back and put daily is bearish. All right, now let's look for our 4-hour. 4-hour time frame. 4-hour time frame is bullish. 1, 2, 3, yep. Our 4-hour time frame is going to be bullish. So in the 4-hour, let's make our little marks here. Go from this elbow right here. Let's clone that. We've got a higher low and a higher high right here. Now, in the next 57 minutes, when the 4-hour candlestick closes, if it is above this area here, we will then, if it is above this structure point here, we will then have a new higher high and a new higher low. But for now, you want to always, let me preface this, you want to always wait for the candlestick to close. Never want to assume just because it's above that it's going to close. These wicks is not showing where price is. It is showing where price went, but is not showing where price is staying. So we want to wait for the closure of the candlesticks. If this closes in the next 57 minutes above this structure point here, then we have a new higher high, which will then give us a new higher low. So let's go back to our weekly time frame. Well, we've got this right here. Our 4-hour is bullish. But I still like this pair because we have 2 time frames in sync, our weekly and our daily, our strongest time frames. Weekly and daily are our strongest time frames. We have 2 time frames in sync, which are our strongest time frames, the daily and weekly. So this would be stronger. This would be a stronger confluence to have our weekly and daily in sync rather than our weekly and 4-hour or our daily and 4-hour. We have got the 2 highest time frames in sync. So now what we want to do is, since we have our overall time frame, we know that the market is going down because the overall time frame is bearish. We've got 2 of the highest time frames in sync with one another. So we know right off the bat we're going to be interested in selling this market. So we are interested in selling this market because the overall trend is bearish. So now, since we've got the overall time frame, now we're going to be looking for our area of interest. So let's check out the weekly here. I see my weekly lower high and lower low. I want to find an area of interest between the lower high, and the lower low. And since we're selling, my area of interest needs to be above where the price is currently. So price is currently at 0.9207472 now, but we want to find an area of interest that has at least 3 touches. I see this right here, that there, this here. Okay, so here I see our weekly area of interest. So I see one tap to this area here. Here. One here. Another one down here. And another one here. That was created last week. So we've got 1, 2, 3, 4 touches in this weekly area of interest. Okay. So now what I'm going to do is I'm just going to put, I like to identify my areas of interest too. So I'm just going to put weekly AOI, WAOI. Now we've identified this as our weekly. So now that we've found our weekly area of interest, let's go and find our daily area of interest. I'm going to go ahead and just delete this little bubble here. So that was a tap in the weekly. But right here, you guys know my favorite pattern, and that's a head and shoulders pattern. That's what I see right here. I see a daily area of interest right here. Perfect. Literally perfectly showing this head and shoulders setting up here. So we've got 1 tap, 2 tap, 3 tap, 4 tap. We've got 4 taps in this daily area of interest. I don't think we have anything else further over, but we do have a lot of wick rejections here. Wick rejections. I'm gonna keep it right here, nice and tight. This is good. This is ideal. Okay. I like this daily area of interest because it's showing me a pattern here in the daily area of interest. Okay. So we've got our daily area of interest. I'm just gonna put AOI. And we can even go in and look if we and see our 4-hour areas of interest. I don't like doing 4-hour areas of interest only because they're not as strong nor respected as our daily and our weekly. So I don't typically do them. I will use 4 hours of areas of interest if I am maybe trying to scale into a position. So if I see something like this, I could assume that this is going to reject this area here just because we have these taps into this area, but I'm not going to base an entire trade off of a 4-hour area of interest. So we've got our weekly and now our daily area of interest. Okay, I'm going to be waiting for price to give me some rejection at this area. Because I've seen head and shoulder patterns before. I'm familiar with them. I'm experienced with them. I'm going to wait and see if we get any type of rejection from this area. A rejection I'm seeing currently is what happened on Friday. Price came way up here and left a huge wick, showing us that price was rejecting that area. This area of interest, this daily area of interest, one of our strongest areas of interest. So this is a good indication. I love how this daily candlestick on Friday closed. It closed showing me, okay, we are reacting to this area of interest. So before it gets here to the weekly, I'm going to see what happens here on this daily time frame. Sometimes you'll have instances where the daily and the weekly are in the same area. What does that mean? That's all the better, honestly. That is all the better. When a daily and the weekly are in the same area, same zone, all the better. So now since we've identified the trend, bearish, bearish, and bullish. Weekly bearish, daily bearish, and 4-hour bullish. Now that we have found a weekly area of interest, now that we have found a daily area of interest, right here, daily over here, you can see it. Now that I see a head and shoulders pattern, which is a reversal pattern, which just shows us, hey, price has a very high probability of reversing now and continuing the downside. Since this broke, we had a shift of structure in the daily. Now we're waiting for this pullback. We already got rejection. Now I'm waiting for more rejection. It's the beginning of the week, so I don't want to just hop into anything right now. The market's still breathing. The market's still warming up to the new week. You know, it's creating that weekly wick. It's creating that daily wick. As you see, I mean, you always want to anticipate a wick to the upside before entering any trade. You know, if you don't have a wick to the up or downside, typically you're gonna have one. I mean, if we look here, when was the last time we didn't have one? Is that, there's still a little one there. Still a little one there. Here we go. So the last time we did not have a wick to the upside was June 23rd. So it's been, what, 10 months? So 9 times out of 10, you're going to have a wick to the up and to the downside of each candlestick on the daily and the weekly, typically. I always anticipate one. So for this instance, I'm anticipating this to have a wick to the upside, have another rejection, and then I will start looking at my entry signal. And that's what we're going to go over right now. So now we're going to zoom in to our lower time frames where we're going to be looking for our entry signal, where we're going to be looking to enter the trade, to get this trade underway. So in the daily, this dotted line right here where I have my alarm is where this is where the neckline of that head and shoulders is. We want to be below that neckline. So what I would wait for personally, I'm here in the 4-hour time frame, is I would wait for price to break below here, give me a red bearish engulfing candlestick here, close, give me a slight pullback, let me enter right here, or I can wait for double confirmation and wait for another bearish engulfing candlestick. And then you could enter here and then watch price continue to fall. So does that make sense? Now that is with your 4-hour candlestick. Now I would like to wait for a 4-hour bearish engulfing candlestick to close, wait for a retest below this neckline to then continue sells to the downside. Oh. Now what I want to make sure that you guys learn is that we are making sure that we are bearish in our 30-minute and our 1 hour. If we're bearish in our 30-minute and our 1 hour, and we get our engulfing candlestick, by all means, enter the trade. So as you can see here, here is our 1 hour, and it goes back to market structure. We've got since we are bullish in the 1 hour right now, we want to wait for it to shift bearish. So this would be our higher low, and this would be our higher high. So we want to wait for price to shift and close below this higher low. That would give us our shift of structure in the 1 hour. Or you can wait and have it happen in the 30-minute. 30-minute and the 1 hour, whichever one is cleanest, whichever one gives you that entry signal, whichever one shifts structure to the downside, which that's where we would want to shift currently because we are bearish in our higher time frames. We want it to shift to the downside. So we want to have a candlestick look something like this. Here, we want to get a closure below this point right here, because then that would make and give us a now lower low and a now lower high. So we would be bearish. What I would wait for is this little pullback. Just a slight little pullback so I can get the best entry possible. This is where you get your sniper entry. Enter there and then let price do its thing. If you go into a little bit of drawdown, it's okay. We are still bearish in the 1 hour. We are still bearish in the 30-minute. We are still bearish in the 4 hour. Once we shift below this area right here, we'll be bearish in the 4 hour. So the more time frames that you have in sync with one another, the higher the probability is going to be that price is going in your direction. So once price closes above this area, we want to wait for a 4-hour candlestick to close below this area right here, is in that would shift us bearish in the 4 hour. Then we're bearish in the weekly, the daily, and now the 4 hour. All three of our higher time frames will be in sync. Wait for a little pullback into this area, enter the trade, and then watch your profits come rolling in. So we'd be shorting this position, have our stop loss, and our take profit. I like to have a daily stop loss and a daily take profit. So the 1% playbook is set up for both day trading and swing trading. I like to hold positions so that I can have bigger profits. Give me a stop loss above the previous wick. I see another valid area of interest right about here. We can go into this area. That would then create us and give us a new lower low and a new lower high. So getting our entry precision, we are waiting for that shift of structure in both the 30-minute and the 1 hour, and also waiting for that engulfing and just that little wick pullback, just so we can get that little bit of a better entry. That is a sniper entry. That is what we want in the markets. So let's go here to our weekly. Let's kind of give a rundown here. Got all of our time. We got our weekly bearish, our daily bearish, and our 4-hour bullish. What are we waiting for? We are waiting for this candle to close. If this candle closes, we are then waiting for a shift of structure in the 4-hour, which would lead us down here, giving us a new lower low and a lower high. It would shift the 4-hour bearish. Now all of our 3 time frames would be in sync. Bearish, bearish, bearish. We'd wait for that little pullback. Make sure our 30-minute and our 1-hour are all bearish. So what I'm going to do, so that I'm ready, see I've got my alarm right here. I would always set an alarm where you want to enter at. Go down here. So our lower time frames, we need to shift below this higher low. Shift below, give us a wick pullback. Shift below, give us that wick pullback in the 4-hour. And then your trade has been analyzed. This is what we're waiting for. This is why I have my little dotted line here. So you want to make, I'm going to go right here, entry, signal, wait for your 30-minute and 1-hour to SOS, shift of structure, the shift, then syncing them with your higher time frames, which is the overall trend of the market. So if your higher time frames are all bearish and now your lower time frames are bearish, that's your entry signal to get in. Your 30-minute and your 1-hour shift of structure. And I love this trade setup too because I'm also waiting for this 4-hour to shift structure. If it shifts below this area here, I'm going to wait for a wick pullback and then I'm in. Wait for a little 1-hour engulfing if I want extra confirmation. But other than that, I'm in. I'm in for sales. I'm in till my take profit gets hit at this area of interest where this, which should create, and I anticipate it creating, support. Just like this has already started creating resistance. So this is what I look for in my top-down analysis. Look for my entry signals and I look for a trend of the market. And I always make sure that my areas of interest are within, if I'm selling, and then always make sure areas of interest have 3 or more touches from price in the past. We want to make sure that we are using a weekly or daily area of interest. So we've got the trend, we've got our area of interest, and we've got our entry signal. Now that we've got those, we can enter the trade with confidence, knowing, okay, this is the highest probability setup that I've got. Everything checks off. We've got a trend in our favor. We've got a strong area of interest. Price has already started to reject it. And now we've got our entry signal, which is our 30-minute and our 1-hour shift of structure. Once they shift structure, they will be below this area of interest. They're below it, and then we will anticipate them to reject it. You can get in on the pullback here, or wait for that engulfing to get in. Regardless, you can get in, make you some profits, let it hit your take profit, and get out. And that's it. And then you're on to the next trade. And if you miss it, don't worry. There's always more opportunities in the market. So I'm going to make you guys a quick little checklist here. So, checklist for high probability setup. So, one, we want to make sure the trend is in sync. Two, make sure we have and price is at or near our weekly or daily area of interest, because those are our strongest areas of interest. And then three, entry signal confirmation. We want to make sure that we can check off each one of these here. Make sure that the trend's in our favor. We want to make sure that price is at or near our weekly or daily area of interest. And then we want to make sure that we are getting our entry signal confirmation. And if we get those three things, like I said, enter the trade. So here is your top-down analysis, what you need to be looking for in every pair each week. Each pair that you analyze, I analyze all of these pairs, and I can encourage you guys to go and do the same thing. A little bit of practice. Each pair, just go through this entire list here and do this top-down analysis on every single one of these pairs. You will become a master at doing a top-down analysis. I'll give you guys just a second to screenshot this, note all of this down right here. I'm hoping you guys are enjoying this and liking this, and feel free to go back, rewind, pause, whatever you need to do, just so that you guys get this 100%. I want you guys to have this down. I want us to all be able to go into our war meetings and be able to analyze all of these here together. I want you guys to do your own war meetings before you show up on Sundays and do them with me. Because I'm going to show you guys everything that I'm trading this week. I want you guys to be able to do this. I want you guys to be the best traders you can be. Because I know that if you don't quit, you can't lose. And that is the problem with 90% of traders is they quit. They quit because they lose a little bit of money. They quit because they got wicked out and then it went straight to take profit. You know, that's a part of the game. I wish I could teach the experience of being in the market. Let's say you make a mistake, learn from that mistake, and go into it in the next trade with a different mindset. Every time price takes you out, always think, well, what if it had went in my direction? You know, what if I had made the money that I just lost? You know, because what you're doing is all you are predicting the market. Is it going to go up or down? And as long as you guys practice and practice and practice and get time in front of the charts, I mean, put 1, 2, 3 hours a day into the charts, looking at them, going over, marking your areas of interest, looking at different entry signals. You know, give yourself situations, do a top-down analysis of different setups before putting money into the market. You know, watch how the market moves. Watch how these candlesticks close. And I promise that you will become a much more experienced trader if you put in the time and you put in the effort. I can give you everything. Now it's your time to go out and to perform. So we're only on lesson 5. We're going to go and jump into lesson 6. I hope this made sense, and I hope you guys enjoyed this, and I will see you guys in lesson 6.